everybody. Thank you for attending Sharon Crescent United Credit Union's home buying seminar. I'd like to welcome you all, Alex, you especially, our in-studio audience. A little bit of housekeeping for everybody. Presenters as well. Please, cell phones, if we can have them turn to silence. Hold all questions, if possible, to the end of the presentation. We're happy to answer all questions at the end. Pointing out the facilities are just across the hall for anybody who needs them. And there's food and refreshment in the back. Please help yourself throughout the presentation. Don't be shy. I'd like to start with introductions, our presenters. My name is Christine Smith. I am the Mortgage Operations Manager at Sharon Crescent United. We have speaking first will be Robert Stevens. He's one of our senior underwriters. He's been with the credit union for about 8 years. After Robert, we have Carolyn Harrington. She's a senior underwriter as well, and she's been with the credit union for 4 years. After Carolyn will be James Wardell. He is a mortgage loan originator, and he's been with us for 2 years. After Jim is Preeti Waldekar. My apologies, real estate broker. After Preeti, we have Ingrid Williams, mortgage loan originator, who's been with the credit union for almost 21 years. If I did I get that right? And then closing out the show is Scott Syatt of attorney law offices of Scott M. Syatt, attorney at law. A lot to look forward to. Today we'll be discussing the overview of the home buying process, obtain and review your credit report, obtain a pre-approval from Sharon Crescent United Credit Union, select a real estate agent to assist in your home search, shop for your new home, which hopefully will be the most fun for everybody. Consider a real estate attorney to assist with your purchase and sale agreement. There's negotiations that go with that. The attorney also will assist with the purchase and the mortgage with Sharon's closing attorney. So without further ado, we have Robert Stevens up next to talk to us about the basics of credit report.
Thank you, Christine. Hey, good evening, everybody. My name is Robert Stevens, Senior Underwriter with SCU Credit Union, and I'm going to talk about the basics of credit reporting. So a lot of people want to know where this information comes from. It's submitted by any of your creditors, and also it's public records. And what is in your credit history? It has your name, your social security number, your addresses, your date of birth. It contains all that information. Also, it has residential and employment history that goes back quite some time, depending on your age. So account information, including your payment history, is on there. If you've had any legal judgments or bankruptcies, foreclosures, short sales, that's going to be on the report as well. Recent inquiries, we'll talk about that a little later. They report up to 2 years of inquiries of how many times you've had creditors look into your credit. We focus on the last 120 days, but they actually go as far back as 2 years. And if you happen to have accounts that you are disputing information on, any disputes you filed would be on that report as well. So how is your credit history built? So the moment you open up an account and you make your first payment or don't make your first payment, it gets reported. So it starts showing the history of how you're paying your bills. Each month, your creditor updates their records and shares your account statuses with the credit bureau. So it doesn't matter if it's a credit card, it could be student loans, it could be car loans, personal loans, any type of loan you take out, unless you're, do a private loan with somebody, it's on your credit report. So your creditors every month are updating the records and they're sharing their account statuses with the credit bureaus. The bureaus update their records and add the current month to their history on how you've paid the account. So it's just a continuing cycle, as the screen shows. Okay, what is not part of your credit history? Any criminal background information would not be part of the credit report we use. The credit reports do not contain medical information. Sometimes in some cases, if you have a medical bill that wasn't paid, that could be on there, but it doesn't contain anything concerning any of your medication you're on, your overall health. It doesn't reflect any of your buying habits or transaction history. So we don't know if you're going down to Foxwoods every month, spending money or not, or by your credit report. So bank account information is not on credit reports. We would look at your bank account separately. And you're actually, a lot of people are surprised your credit scores are not on the credit report. Those are provided by a model that's used and they come up with a score. Okay, and so that leads us into what is a credit score. It's an automated way to analyze your credit history. Now, every credit bureau uses their own formula. They all have algorithms and they come up and they crunch numbers based on a number of different factors. Not every model is the same. So you can have a credit bureau, but one company that uses it, they may use a different model than another one. So the score is not always going to be exact. So the scores range anywhere from 300 to 850. Very rarely do you see 300 and very rarely do you see 850. But those are the ranges of the scores. And the credit scores used for a mortgage application are calculated differently. That's called a tri-bureau merged report if you're applying for a mortgage, and that actually is a combined report that has all three bureaus and it gives 3 scores. Right, so what impacts your credit score? How you pay your creditors, whether it's good or bad, it impacts your score. Obviously, you want it to be good. Amounts owed. I'll cover that when we get a little further down the screen. I'll make that a little more clear. The length of the credit history, how long you've had your credit, plays an important part of your score too, because if you just recently opened your credit, even if you're paying it well, you're not going to have a seasoned report like somebody who's had their credit for 10 years. So the length of your credit is important. Credit mix, that's a combination of secured and unsecured loans. A secured loan is if it's secured by a house or an automobile. If you take out a car loan, it is secured by the automobile that you're financing. Unsecured loans are credit cards, student loans, personal loans, to give you some examples. Number of inquiries. If you are doing a lot of shopping around for new credit and you do it quickly, like over a very short time, that's actually going to hurt your credit score because the credit bureaus reflect that, okay, this person's really looking to try to open new credit. So it does actually have a negative effect if you're doing too much shopping around. So new credit impacts it because if you open up a new account, your score will come down a little bit until you've established the history on how you're paying the new account. And revolving debt usage percentage, that goes back up to amounts owed. If you have $10,000 of available credit and you have a $9,000 balance, that means you only have $1,000 left. So somebody who might only have $1,000 balance with that same $10,000 limit is going to have a better score because the higher your debt usage percentages, it impacts your score in a negative manner. So if you're opening up credit cards, maxing them out, that is going to count against you when they do the modeling for the scores. Okay, why do credit histories and scores matter to you? Well, all lenders use this information to determine if you meet the requirements to lend to you. So a underwriter is going to look at your credit to kind of make a determination on what you've done in the past and what you're doing in the present. What are you going to do this in the future? Lenders also use credit reports and credit scores to determine the likelihood you're going to pay a loan back. So your history, how you handle your credit can either help you or prevent you from buying a home. Credit scores, credit reports are, the histories are also used by employers. A lot of employers will actually do a credit check. Apartment rental applications, utility companies, and also some insurance companies will also look at your credit score to see what kind of a risk you may be based on your, to determine if that you would be a risk of getting insurance for, say, an automobile. What are permissible reasons for requesting a credit report? We have to follow regulations called the Fair Credit Reporting Act. So we can't randomly pull somebody's credit. We have to have a reason for that. And the reason would be is because you're applying for a loan, whether it be a mortgage or an automobile or a personal loan. So opening and managing credit accounts, making offers of credit. Employers, you do get from, they will pull a credit report if you apply for certain jobs. Business transactions, anything that the consumer initiates, that you've applied for something. Insurance also will do that, when they're underwriting insurance, purchases for vehicles and certain other types of insurance. Court order, the courts can pull your credit report. And if you're applying for certain types of government licenses, they will also obtain a credit report. So who maintains credit histories and provides the credit scores? The three bureaus we use are Experian, Equifax, and TransUnion. So they all, you can go online and go in and go into their websites, but these are the three major credit bureaus that provide credit, that provide your credit history to either you as an individual or to lenders. Okay, so how can you build and manage your credit history? You definitely need to have a plan that you want to strategize how you're going to do it, because building credit is important when you're young and you want to build it properly and diligently so you can put yourself in a good position. So you want 3 active trade lines is usually the best way to go. So, credit, whether it be credit cards or auto loans, you always want to pay as agreed. Use caution opening or closing accounts. I did mention earlier that caution opening is you don't want to go crazy opening cards. But closing accounts can hurt you as well, because if you close a credit, say you have a credit card that's 10 years old and you close that account, that's going to actually hurt you, because then the credit bureaus are going to say, okay, your history is not seasoned as much anymore. So that will actually hurt your score. So closing accounts does not necessarily help you well. So you want to apply for credit thoughtfully. Time and performance, which means make sure you're paying it on time within the due dates. Show the credit bureaus you're stable, so that the lenders will say, okay, this is a person who's stable, they're paying their bills, they're not overextended. And so making your credit work for you is the key. So what I'm going to do is I'm going to turn it back to our moderator, Christine Smith. She's going to touch on our tool we have for our members of the credit union called Savvy Money.
Thank you, Robert. Before I get, this is a very exciting piece because I have a personal story to tell about Savvy Money, my own personal experience. But before I do that, I did want to introduce the president of the credit union. Glenn Parsons is here. Would you like to say a few words, Glenn?
Sure. Yeah, the momentum is back.
We'll pick it right back up.
All right. Excellent. Well, I'm excited to be here. I know with everything that's been going on, all the publicity the last couple of years, low inventory, interest rates, everything else, it's hard to get into the market. And those who are trying to get in the market, I love it. Love to see it. I know there are people online here too, correct?
Yes, we do. Yes, speak right to the camera. Yeah.
Right. So really, I'm just excited just to see what types of people are looking for homes nowadays, and just trying to help as best we can. Buying a home, as you guys know, is probably the single biggest investment you'll ever make. And it can be scary, right? It can be confusing, it can be intimidating. It can be lots of other adjectives, right? And this group right here is all here to help walk you through that, make it a little bit easier. And I'm sure you've already covered this in general, but you've got people here, loan originators, you've got realtors here, you've got the lawyers. All these folks are here to make it easier for you guys, to take some of that stress away. And I'm really proud of that. We're a credit union. Credit unions are different from banks in a multitude of ways, but essentially we don't have shareholders that are traditional sense of shareholders, I should say. We're owned by our members. So we don't always make decisions based on financial criteria. Yes, we're a financial institution, so we have to be smart about things, but we're really doubly committed to both the community and our members as a result. So these are the types of seminars we like to put on. We like to hear, what works, what doesn't work. We try to make it better all the time. This is not the first one we've done. We're going to do more in the future, no doubt. But in any case, I just wanted to thank you guys for contributing, for participating, and to let you know that we really care about you guys. And whether you become members here, our credit union, or someplace else, we'll still be here for you. All right. So thanks.
Bringing us back to Savvy Money, this is an online tool that we can access through our laptops, through our cell phones, our tablets. My personal experience with Savvy Money, I hadn't been exposed to it until I came to work at the credit union. When I signed on, I became a member, went to my online banking, and it was right at the bottom of the screen, very easy. It says, I believe it says register here, register for Savvy Money. Don't quote me, but it's something very easy. So I registered for Savvy Money. Literally, all it did was launch the tool for me. I didn't have to, no user ID, no passwords. Now, every time I access my online banking, Savvy Money's there. Looking at Savvy Money, I've been in mortgage lending for 30 years. I wish every borrower had access and knowledge of this tool when they needed it. Your credit score plays such a big part in being able to qualify for a mortgage, and sometimes it may come into the interest rate on your loan. So you want to make sure you're doing the best that you can for your credit score. Savvy Money helps you with that. There's all different tabs, monitoring credit alerts. If there's new credit on your profile that you weren't aware of, Savvy Money is going to tell you. Credit score and more, it's going to tell you where your credit score is landing. And I believe it refreshes, I believe it's weekly. And then the score simulator, this is my very favorite part. This gets me so excited. This is an if and or what if tool. What if I pay off my credit card? What if I get a personal loan? What if I, increase my credit limit? How's that going to impact my credit score positively or negatively? Putting the information into the system, playing with the slides, the data, it's instantaneous. It's going to tell you, yep, Chris, go right ahead. Go ahead and buy that new car. It's not going to do much to you. Or, whoa, don't get any new credit. You need to stay where you are to keep improving on your credit score. So that Savvy Money, it's on our online banking. Every member has access to it. It's free. It's a great tool. So please, in your home buying journey, please do go ahead and check out Savvy Money and use it as a tool to help guide your credit and your credit scoring. So now we're going to toggle back to Robert, senior underwriter. He's going to close the loop on our credit reporting and how you can correct errors in your credit reporting.
Okay, so this is important, especially for people that are looking to get ready to buy a home and to be as prepared as you can, because we do have a number of loan originators here that are going to speak to you tonight. But if you decide you want to fix your credit 2 days before you want to put an offer on a house, you're going to have to kind of put the brakes on. So this is very important. If you get your copies of your credit report, you can contact these bureaus directly. It's great because the internet has all their information. You can submit an online request, telephone, or by mail. If you're disputing anything, you do have to be specific and you have to specify that, I did not pay my Chase card late in March of 2024. I dispute this information. And so you have to be specific. And then the credit bureaus will verify the information with the source. So they'll actually reach out to the individual creditors to follow up and say, was this, to see if it was a mistake. The bureaus have a period of time. They have to respond. I'm not the bureau, I apologize. The creditors must respond once an inquiry is made. But the process takes 30 to 45 days. So if you're looking to get your credit in ship shape to apply for a home, you probably want to look into this 3 months before you actually apply for the loan. The sources are verified, corrected, or updated, and and they're responsible to provide any corrections to all credit bureaus. So if they discover that Chase was wrong, if Chase says, okay, we misreported this, Chase has to now, and I'm just picking on Chase, it doesn't matter who it is. They have to report to the bureaus that we were correcting this, it was not linked. So consumers can add statements. So if you don't like what Chase or whoever else said in their investigation, you can file what's called a dispute and have it put on the report that you dispute the information. So these would be the steps to follow to go through your report and clean up any possible mistakes that could be on your credit. So I'm now going to introduce one of our loan originators, Jim Wardwell, and he's going to talk to you about pre-qualifications versus pre-approvals.
I was told to go over on this side.
Thank you.
Better? Okay, Jim Wardwell, mortgage originator. I've been doing it for 32 years, so pretty versed on pre-qualifications and pre-approvals. So first-time homebuyers, when you meet with a realtor and you start looking for homes, they're gonna ask you if you've been pre-qualified or pre-approved. There's a distinct difference between the two. So pre-qualification, essentially, you talk to a loan officer or a loan originator. On a pre-qualification, most likely they're not gonna pull your credit. Okay, they're gonna ask you what your credit looks like. Maybe you have Credit Karma, maybe you have a copy of your credit reports that Robert talked about that shows your credit score. But on a pre-qualification, they're taking your information you're giving us, and we're not back checking that, and we're basing your income off of what you think your income is, maybe a pay stub, and that type of information. Realtors do not really like pre-qualifications. And the reason being is if the seller of the property they listed picks you on the offer of the home, they want to know that you can close your loan, okay? So we have an alternative. Other banks have an alternative called a pre-approval, okay? A pre-approval will take all the information that you take for a regular mortgage. The only thing that's left out of it is the actual property address. Okay, Robert, or Caroline will underwrite the loan like it's a real loan. They'll get all your income information, all your asset information, pull a credit report, and backtracking there. If you're at the very infancy of buying a home and you're just starting to save and you know you're not buying something for a year or 2 years, I would highly recommend just going back to a pre-qualification. Don't run around and get pre-approvals from 5 or 6 different banks. Robert talked about it earlier. Those are inquiries on your credit, okay? So once you settle down and you know, okay, hey, we got a pre-qualification, we started saving our money, we want to move to the next step and get pre-approval. So SCU has the Smart Start program. It's a complete pre-approval. Again, Robert or Caroline would underwrite the loan like a real loan. There are fees with this process, but as you'll find out from Ingrid, who's going to talk about the Smart Start, those fees end up coming back to you if you decide that SCU is going to be the credit union or the lender that you want to use. Okay, so pre-approval, you're going to know how much you can afford to buy. You're going to give us all the information that we need, and it really, really does strengthen your position with the realtor that you walk in. I know that the realtors I work with, when they know they have a Smart Start pre-approval, they know it's pretty much ready to close. And in today's market, Preeti's gonna be talking soon. Preeti and I have done some deals that we closed the loan in 3 weeks. Okay, and most of the customers had done a smart start. They were all ready to buy. And they found a home, and the reason they got the home is they could close so quickly. So, again, if you're just starting out, pre-qualification is a good way to go. But again, the smart start and Ingrid's gonna talk about that and be the next step, from there. So next, I'm gonna
You're gonna
introduce,
introduce Preeti.
okay, yep, I'm gonna introduce Preeti. Preeti Walker is a realtor, a great referral source for me, and very well, versed in, the real estate world. Thank you.
Good evening, everyone. We have a room full of very people very accomplished in this field, but I have had the pleasure of working with Sharon Credit Union in the past 2, 3 years, and it's been amazing with the transparency in the process, the speed, the low closing costs, and the attention to detail. So I have been working with a couple of loan originators, most recently, or I should say in the past 1.5 years with Jim, and it's been an amazing experience. And the closing costs are very, very low, which I compare a lot of. So my forte is mostly with first-time buyers. And I work with a lot of first-time buyers who are very young and very clueless. So they have the money, but they're clueless as to what they want. So I help them end to end in the process. And in that, I also shop or help them shop for mortgage rates. Not that that's part of my job, but it's just happened that when I got into real estate and I came from a tech background, I was just thinking, what can I do different? What can I do different? Where can I add value rather than just taking someone, showing them 2 houses, 10 houses, whatever time it takes. So that's where I sort of started going to all the inspections. I started comparing rates, and that gave me a very good idea of what the market has out there. But I think that starting with as a first-time buyer or even as an accomplished buyer, even if you're an investor, I think in today's market, the inventory is low, the prices have gone up considerably, but there are a lot of towns that are still on the growth path. There are a lot of towns where you can raise your families, or there are upcoming schools or towns that you wouldn't have considered otherwise. So I think a good start would be to spend a couple of hours speaking to your realtor and understanding what their needs are, because it's a daunting experience for some, and it's also a very exciting experience, and you just don't want to get it wrong. So it's a good exercise to tell them what your needs are, what exactly you're looking in a property, or maybe you're not very clear, and then let them add their value. If you tell them what is generally the vision, where are you going with it? It's also the towns you can discuss, because sometimes I come across buyers who know where they want to buy because they have family, they have friends there, they have a support structure. Some of them just want to be close to the city, or some of them are just going and living in a particular place because they have a friend living there. And that's a bad decision because I've had a case. I moved someone to Sharon and they were not even looking at Sharon earlier because of their commute into Boston. And 6 months later, the friend who told them to buy in Sharon moved away from here. So, but yeah, there are many such nuances. And also with the towns, there are sometimes we discover towns that, like, just for example, Winchester is a very expensive town, but they don't pick up your trash. So it's like, why wouldn't they do that? But it's because they just don't want the bins to be lining outside your houses and the town to not look beautiful. So things, or that some towns have town water and town sewage, but the others don't have that. They have septic tanks. So understanding what are the nuances of that. Or there are some locations like Acton, where in the school system, you're not allocated according to your postcode. Zip code. I used to be in the UK, sorry. So according to your zip code, but it's more dependent on what you put as your choice of schools. So they have 6 elementary schools, and they will choose, you can choose which schools do you want and put it in that order, and they assign you the school. So knowing those little things about towns, understanding what is the demographic like, which are the growth towns, which towns are seeing a lot of increase because there's a big shopping area, or like Woburn is one of my favorite towns. What's happening there? A lot of life sciences companies are moving there. It has low property taxes. So understanding the nuances of, and it's a good spot for I-93 and I-95. So if you're not looking for schools just yet, and it's a first time buyer, that would be a town I would recommend. That's as far as understanding the needs of the client. Moving on from there, once always stay in touch, go and visit as many open houses as possible. Sometimes they might not be the ones that you think you like, but you might be amazed when you go and see a property and you buy something that you never thought was even an option. And so visit more and more open houses, do the pros and cons of every property. And there are going to be compromises. So you will have to make compromises in this market, but then you have to see what things are desirable and what things really matter to you. As far as the process goes, the experience that I've had with pre-approvals, with pre-qualifications from Sharon Credit Union, and not because I'm standing here, but I've had an experience, amazing experience, including at the moment, I'm buying a property for my daughter through them. So she's applied and she's doing it. And she's just a 25-year-old asking them a million questions and they're very happily answering everything. So it's good to know where you stand financially and what kind of buffers you have in case you had to go a little over the price that you think you want to buy. From there on, once the property is identified, always see what contingencies you can put. Go and visit the property a couple of times, maybe once at the open house, once separately with your realtor, so that you can see it more at peace and not just walk through and forget, oh, I saw this bedroom, but maybe it was in another property, because sometimes we see 5 open houses and then we don't know what we saw where. So just those little things, but inspections as well. There are radon inspections, which again, not applicable for every town, or Title 5, where there's no town sewage, but how old was the septic? So knowing a little more about all of these things, where a good inspector would come into considerations. Sometimes not recommended, but sometimes you have to buy properties in a very competitive market without doing inspections. So be a little extra careful how you can go and do your due diligence or get your attorneys to answer questions before you make those offers. So you know what you're doing. And pretty much until the day of the closing. So the whole process, once you have identified the property, you go through the inspection. The next stage would be a purchase and sale agreement. That pretty much binds you to the contract, even at a high level and with more money commitment than the offer itself. I've had an amazing experience, which I've not had with big banks. Like big banks, you're just a number somewhere. You're just a file number. There is no person at the end of the phone answering your questions. But here, with this bank, or with this credit union and a few smaller banks, I've realized that you have a person. So suppose it's Jim. He's available. He's the only point of contact. It's not that the file is gone to somebody else and then you're going to a helpline somewhere and they don't know what you're talking about. So that helps so that you have a timely closing and it's more hassle-free. And at the end, the last day, do a proper walkthrough. Go and check everything that you saw before. Because sometimes people forget that you're excited, you go to the property and then afterwards realize, oh, in the walkthrough, I forgot to see, was the refrigerator still there? Because I had a closing recently, where again, it was not malicious, but the packers moved the refrigerator. And then we went and realized, okay, the refrigerator was supposed to be here. And the owner said, yeah, we left it, but the packers had packed it away. So yeah, a good walkthrough is very necessary. And having a good attorney by your side, again, I've worked with Scott before, so he's done a great job. And that was when we were buying our home. So, we've been through that process. The due diligence that they do, so you need a trusted person. And I think I've had an amazing experience with the credit union. And I would always say shop around for rates, but at the end of the day, also look at which banks or which credit unions will make that happen for you in a very timely manner. So the whole experience is more happy and not very stressful. Thank you.
Thank you, Brady. And next, I'd like to introduce Ingrid Williams. She's mortgage loan originator. She's going to talk to us about the role of the mortgage loan originator.
So my job basically is to help you from beginning to end. We're gonna start with the conversation, what your interests are, what you're looking to do. Sometimes we'll do that pre-qualification just to get an idea on where you may land, to make sure that we're on the same page, go over the products, the services, and then we jump into the Smart Start. Smart Start is the best option. If you're ready to purchase the home, it does give you buying power because it's fully vetted pre-approval. Again, I know someone mentioned previously that with the Smart Start, the only thing left is the house. So it gives you a great step up in the process of that. Our Smart Start pre-approval, we would start by collecting your documents, which I'll go over on the next slide. There is a fee involved with it. It's $200, but you do get that fee back when you close the home with SCU. You're also going to need to decide on fixed rate or adjustable rate, and then we also have part-time home buyer program. We have the regular Smart Start pre-approval right now for the remainder of 2025. We offer an additional lender credit at closing of $525. So you'll get that initial 200 back plus the 525 as a thank you from us for doing your Smart Start and taking this big step with SCU Credit Union. The first time home buyer program, if you're a first time home buyer, they're going to go over that in more detail, but that one includes a $1,000 credit at closing. When you're doing your Smart Start, we're gonna ask you about down payment. So if you don't put at least 20% down, you're gonna be subject to PMI. There's usually lots of questions about that. We can handle any individual questions about that or beyond, but that's mortgage insurance. That covers the lender in the event something goes environmental. Excuse me. What does the lender look for? So when we look at your file and it goes to the underwriting team, they're going to be looking, as Robert spoke, in detail about your credit history, length and type of employment, gross monthly income. So that's going to come into play with your debt to income ratios, along with the liabilities and debts. And then we're also going to look at your liquid assets. So that's going to include your current bank statements, retirement funds, things like that. So we want to show that you have the funds to make this purchase. We certainly don't want anyone getting in over their heads. We want to make sure that we're on the right track for your home buying experience. For employment income, we do need a minimum of 2 years consecutive employment with no gaps. We understand life happens. If there's a gap, there's usually a very good reason for it, and we'll ask for an explanation. We may ask to go back 3 years instead of 2 if there was a significant gap. Income from part-time employment, second jobs, or seasonal work, and then we do need to see a full PDA history in order to count that income towards the qualification. Documentation that we will collect. It's a pretty short list for what we're looking for, but it's pay stubs that will cover a 1 month period. These are for your W-2 employee. Previous 2 years W-2s, 1099s. If you're self-employed, we do need just your federal tax returns for business and personal, as well as a year-to-date profit and loss statement. For if you're on Social Security or disability or have a pension, we would just need a copy of that award letter and your 1099s. In some cases, we will ask for your most recent federal real estate tax return. If you're receiving alimony or child support, that can be used as well. We would need a copy of the divorce decree, separation agreement. And then we'd need to document that you've been receiving those payments for at least 6 months. And then the other piece that I mentioned, we'll also look for 2 months bank or investment statements. This time, we're going to bring up our closing attorney, Scott Syatt.
Good evening. Scott Syatt, and I am the attorney that represents the credit union and helps you with your closing when it comes time for you to be at the final stage to buy your property. And I was thinking about when I was listening to everybody, when you're buying a house, obviously you look around, but then you get this whole team, everybody that has spoken and who's going to speak is going to be involved in this transaction. So you have a whole team working for you, including me, to get this whole thing done. So it's important that you collaborate with us to get everything done as well. What's going to happen is you're going to go to somebody like Preeti, who was excellent. Again, I appreciate her saying that about me. Everybody's excellent here. And she's going to, once you sign an offer, she's going to send the offer to me and give me all the information on who is handling the seller side. And we're going to work on the purchase and sale agreement together. And what's going to be in that purchase and sale agreement, there's going to be some key terms and conditions, closing date, the time, place, closing date, not schedule your closing on a Friday or a Friday before all of it, because I can't tell you how many times things go badly. And then you have the whole weekend, you've got movers ready, and now you have to reschedule everything. So keep that in mind. Don't ever do a set a closing date on a Friday, especially at the end of the month or before a holiday. Broker fees, it recently changed that the buyer can sometimes pay some of the broker fees. So make sure you make that clear with your broker who's going to be paying the broker fees in the transaction. Usually it used to be just the seller was assumed. It's not assumed anymore. So make sure that's clear. Representation as to the property condition. Sometimes you're buying it as is. Sometimes, most of the time, you're having an inspection and you will ask for certain things from the seller as part of the negotiations to get those things taken care of prior to the closing. Any known defects, sometimes you're going to want to deal with it, sometimes you're not. Are there any tenants in the property? You want those cleared. Or if you're going to take it over, that's one thing, but you want to make sure you get estoppels to find out from the tenants what they actually put down as a security deposit or last month's rent, so that they can sign off on that, so they can't say anything to you later that, oh no, I had a different deal with the prior seller or the prior owner. We're going to have the property description. There's multiple parcels, sales price, obviously. The deposit, usually when you sign an offer, you give them $1,000 to bind the offer. Then once the purchase and sale agreement is done, you put about 5% down. It's between 3 and 5, depending on the loan, but it's usually 3 to 5%. And then who holds the funds? Usually the broker will hold the funds. And we have the closing date, broker fees, mortgage contingency. So you're working with all these people at the credit union, giving them all of the information to make sure that you get this mortgage contingency date. Because if you don't, then you're not going to get your commitment, and then you'll either need an extension or you'll need to pull out of the deal. So if you can't get your mortgage commitment, then you can get your deposit back. But if you get your mortgage commitment, then you're going to have to go forward. And if you don't do the closing, you're going to lose your deposit. So just make sure that you provide anything that they need from the credit union to move forward. General inspection, Title V, depends on what town you're in. Environmental inspections, special issues, condominiums, want to find out if there are any pending assessments, because you'll be responsible for those. You might want to sell this to pay those ahead of time. We talked about if the sale does not close. If you don't have your commitment, you can get your deposit back. If you do have your commitment, you will not be able to. Title insurance. Everybody thinks that this is a scam until they need it. I thought it was also, but it is not. The lender's gonna make you get title insurance for the amount of the loan, but that's not gonna cover you. That's gonna cover the lender. Everyone who buys a property needs to get an owner's policy. That's for the full amount of the purchase. It's a one-time fee, so that if you go to sell your property and there's some title issue that wasn't established early when you bought the property, it'll make it a seamless transition and you'll be able to go forward with your closing. If you don't have title insurance, then you're gonna need to hire a lawyer and take care of it yourself. And that'll be much more costly than an owner's policy, guaranteed that. When you come to my office to do the closing, most likely it's a little bit different now since COVID. They used to have the sellers would be there, the brokers would be there, I'd be there, you would be there, and it would be a really hot room and it would take forever. It does not take that long anymore. Usually we'll already spoken with the seller's attorney and gotten all of the information that we need, documentation from the sellers before you guys get there. And we can usually do closing in under an hour, which is great. You're gonna execute the mortgage and the note. The mortgage is really just, you're executing that to have a lien on your property. The note is your promise to pay. And then we'll record the documents electronically now so that within the day, you'll own the property, which is great. Before I introduce Carolyn, I want to tell you a couple of things about Sharon Credit Union. As I deal with other lenders also. You're not going to see lower fees in Sharon Credit Union. You could go to Bank of America and you're going to pay what's called the origination fee, $1,500, and that's just a throwaway. You're not going to have that here. The fees are very reasonable here. Your access is amazing. I mean, you just met the president of Sharon Credit Union. You needed to call the president of Sharon Credit Union, probably could call the president. You know, this is head of lending. She's right here. She would take a call from you. I'm available. Everyone's available. It's a small, they have plenty of branches, but they treat it like it's just a, local place, which is great. And then I think there was one more thing I wanted to mention. Just don't schedule a closing on Friday. And with that, I'm going to introduce the senior underwriter at Sharon Credit Union, Carolyn Harrington. Thank you.
So SCU's mission statement, as far as mortgage lending is, responsible loans homeowners can afford long-term. So SCU offers a great first-time home buyer program that only requires you to put down a minimum of 3%. So a first-time home buyer is anybody that has not owned a home, a primary residence in the prior 3 years. And there are certain circumstances where it can accommodate displaced parents, single parents, or whatever, that maybe have owned a home with somebody within the past 3 years, but may have not been the primary owner of that property. They can be eligible as well. The loan product that we're offering is a 5-5. So basically what that means, it's fixed, the rate is fixed for the first 5 years, and then the rate can change every 5 years thereafter. Points, the rate can either go up or down 2%, and that every 5 years. Let's just see. Now, with the 3% down payment, if your credit score is greater than 680 and your debt to income ratio is less than 45%, the source of a down payment can be a total gift from a source, a family member type of thing. You can also contact and check with maybe one of the community housing agency programs, and a lot of them offer down payment assistance programs. So depending on the town that you're looking to purchase, you might be able to have that available to you as well. That can be used. The income limits for the loans are based on the area median, which are meant to bring a couple of pounds with us, but you can always check in with us and I can let you know. That can determine your closing cost credit. So if you're at or below 115% of the area median, you can be eligible for a $1,000 credit, closing cost credit. Typically, well, are we offering a full thousand now on all person? I'm gonna have to double check that. I think we. Loan to value is greater than 80%, so if you, didn't have 20% down, if you were going from that 80 to the, so you're using the 97%, the loan will require private mortgage insurance, which is basically insurance that covers the lender, so it would cover SCU, but we kindly pass that fee along to you to pay for it. Okay, if you were to default on the loan. Credit scores, non-traditional credit. So basically, we've been talking all day about your credit and your credit score and how important it is. Some people don't have credit. They don't have a credit score. They don't like to take out credit cards or loans or whatever. We do have an alternative credit program where what we could ask you to provide us is probably a 6 to 12-month history. Maybe it's on your utility bills or your car insurance or some other type of loan that you had, your landlord reference, 12 months canceled checks. If you can pull us together at least 3 of those kind of references, then that's considered alternative credit, and we can take a look at that as well. With that, if you have the alternative credit, or if you have a loan to value of 95% or higher, you will be required, or at least one member on the loan application would be required to complete a home buyer education course. We have found one through Fannie Mae, which is free. It does take a little while to do it, but you can start it, stop it as time goes on, but it's really a good tool. I've looked through some of it. I haven't finished it myself all the way because it is a lot. And that's online and it's free, so you can just do it when you take your own time. So the steps to home ownership. You want to obtain a copy of your free credit report. And take care of any of those things that might need to be cleaned up or cleared up on there. Get your pre-approval from SCU, pull together those bank statements, pay stubs, W-2s, anything like that, and reach out to us. You can apply for that online, which is nice and easy. Once you get that pre-approval, you can contact your realtor, have them take you out, looking at all the houses. That's the fun part. I love going on to open houses. I love seeing what people have going on in there. Then get ready for your closing. You'll finalize all of your documents. You'll close with Scott and pack your bags and move in. Okay. And the next screen. So that first website is a first-time home buyer budget worksheet. You can click on and it goes through and it walks you through the steps. It will list the items that you need to include as part of your deck. The FannieMae.com education is that free online home buyer counseling program, education program. Can get a certificate at the end of that when you complete it. And the green path is actually, we talked about, I was going to just start this. Hang on one tiny second. Green path is the free financial counseling. So they'll give you financial counseling. Okay. All right. And I'm going to pass it back to Christine and she can sum things up for you.
Thank you, Carolyn. I'm going to take the cue finally to stand on this side of the screen. I guess it's more in camera. I think at this point we open up for any questions. Any questions? No? Anybody online? Questions? No? I have to show my age. Bueller. People in the room got it. So, well, thank you all for coming. This is my first presentation with Sharon Crescent, and I think it was fun, and we had a lot of chuckles in the back. I do want to offer some thank yous. We did, I'd like to thank, well, first Linda. Linda Fountain is the SVP of residential lending and servicing. She's at the back of the room off screen manning the online. So all the people at home, thank you very much. And thank you to Linda for facilitating that part of the seminar for us. Marketing, our marketing team they didn't push me along, they pulled me along. Did a fantastic job putting our presentation together, recording with us, practicing with us, and really gathering all of the input to make a very seamless presentation. And getting the room, the refreshments, everything you see here was marketing. It was Langdon, Steve, and Scott. So Scott's literally behind the camera. So thank you very much for that. And lastly, we'd like to thank thank all of the speakers and presenters taking your time to come and support the credit union. That was fantastic, and we really appreciate it. And then we're just going to thank the Stoke Public Library for the use of their room. It's local. So thank you. Have a great night, everybody.
Thanks.